Hi, I'm Sandy Ray, founder of Sandra E. Ray, CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, I want to talk to you about setting up your chart of accounts and the ways that I recommend that we do it so that it works best for your organization. Now, setting up your chart of accounts sounds easy and basic, but it's not. Your chart of accounts is the fundamental way to access information so that you can make wonderful decisions for your organization and grow your organization to where it needs to be and to meet your mission. It is the basis for pulling information out of the accounting software. So I like to work backwards. I like to start with what reports do you need? What information specifically do you need? How often do you need it? How detailed do you need it? And what are the big picture reports that you need? Are you tracking trends? These are all things that we need to be thinking about when we're thinking about the reports that we're wanting out of the system. So working backwards, let's start with the report. Obviously, you're going to need some basic financial statement, generally accepted accounting principles type reports, which is your statement of financial position, your statement of activities, and your statement of cash flows. But you also need to be consistent from year to year so that you can track these balances and information over time so that you can see where you're growing, how you're doing well, how things are declining, and you can make those decisions to make changes. Other things when we're talking about trends is we may be looking at other key performance indicators. Maybe you're looking at cost per meal as a key performance indicator. So you need to know what those food costs and those labor costs are associated with providing those meals so that you can divide it by the number of meals served. Other reporting needs are cash flow management, of course, our budget monitoring, obviously grant reports. We need those out of the accounting system, but we're also going to be doing compliance reports such as our 990, any charitable solicitation registration reporting that we need to do. We have 1099s at year end. We have payroll reports on a regular basis. And depending on your organization, we may be doing some donor management. I don't recommend it, especially as you grow. Many of the donor management software programs are wonderful, and they provide you with not only tracking who donated what, but some analysis on trends. They also obviously provide you with all those tools to do the letters and to do the acknowledgments and the appeal letters and those kinds of things. So probably not the best use for donor management software, but we can use it if we need it to. The second step I want to look at before even attempting to design a chart of accounts is my accounting software and what the capabilities are. Most accounting software allow you to tag information and pull it out of the system in various ways so that you can meet not only your detailed reporting needs, but your big picture needs as well. There's basically three components. The accounts, obviously, and most CPAs will recommend that you use account numbers. And we have, as an industry, basic accounting groupings that we like to use. So I'm going to provide those to you. I'm going to assume a 4-digit account code. You can use any links that you would like. But generally, the 1000s are the assets. The 2000s are the liabilities. Our 3000s are for our net assets. And that's our statement of financial position. And then we move on to our statement of activity, which 4 and 5,000 are reserved for our revenue accounts. 6, 7, and 8,000 are reserved for our expense accounts. And then the 9,000 are reserved for other revenue and expenses. And this is going to be things like our investing income and expenses so that we can report those separately from net income from operations. You can kind of see how the organization is doing. Then you have this other revenue and expense category, and then you see the final bottom line. In addition to our account tags, we have other grouping tags. Now, QuickBooks calls it classes. but it's basically just a way to tag information into a group. Basic information for our Form 990s for our public charities. We have to do program, administrative in general, and fundraising. So I like to, at a minimum, at least do those three. But you're also going to have other programs that you're going to want to track. And to keep track of those, we generally do that with classes, whether it's a program or a department, those kinds of things. Also, you can use classes to keep track of restricted versus unrestricted. It's a great way to tag that information and make reports easy to pull out for you for your needs. Then many accounting software have a third area of tagging information. You can either tag by customer or what's called a project. And I like to use this for the grant. You can really get some granular information either on a grantor, or if you have like sub-customers or sub-projects, the individual grants from that grantor. And it's a really helpful way for tagging those grant report information. One of the other things I want you to look at when looking at your accounting software is how customizable is the reporting feature. The more customizable, the better, but generally then the more expensive. So keep in mind that you need to have some customizable reports. Every organization does. And for those reports that you can't customize, make sure that there's an easy way to download your information to Excel. There's always going to be a grant report or some internal report that we're not going to be able to pull a report out of your accounting system that exactly meets your needs. So you're going to download into Excel, manipulate it, and then send that report out. But we like those one-click reports, as many as we can. Then our third step is actually designing the system. I want you to keep in mind all your reporting needs while you're doing this and looking at your chart of accounts. And I want to start with the basic account. Look at your Form 990. Look at the assets, the liabilities, the net assets. What are the types of revenue and expenses that are on that report that you need to report, and how you need to break that down? And from there, we can expand. But let's start with grouping accounts for easy reporting. What is it that your board wants and your fundraising team needs? And how does your program team need information on a regular basis? These are things that we need to be thinking about with our chart of accounts. And as we expand this chart of accounts from the basic, contribution revenue into the more detailed types of contribution revenue, I want to talk to you about a couple of areas. And the first one is the bank account. I recommend that there be one account on the chart of accounts for each bank. This helps us with the bank reconciliation, making it really simple. Most restricted money can be commingled with unrestricted money. Now, you're going to have to read your grant agreement to make sure that that is the case. If that is not the case, you're going to have a separate account for those grant funds. But if we are commingling funds, one account on the chart of accounts, I promise you, the way we set up the group tags and the project and the customer tags, you will be able to pull your restricted money as a report out of there and then record it in your net assets section. Now, it may be easier for you, and I think this is a very wonderful way of handling this. While you are able to commingle your funds, maybe you don't want to. Maybe you open up a separate savings account for each large grant. That way you know exactly how much money is in that grant, because you're going to deposit the money into the checking or savings, and you're going to pull the money out to make those disbursements for that grant. So whatever balance is in the account, that is your restricted balance for that grant. Either way works. Having multiple banking accounts can get maybe a little bit expensive, depends on your bank. And then of course you've got reconciliations that you have to do. The other thing is you have to remember to periodically make sure that you're transferring money from that savings account to your checking account. If you are not writing the checks directly out of the restricted check account, then you need to accumulate how many checks did you write, how much did you disperse from that grant, and move the money. from the restricted account to your operational account. The second area I want to talk to you about is net assets. And I think this is the most confusing part for most people. It's net assets is just the difference between assets and liabilities. In total, that's all it is. But we break that down into 3 areas. We have unrestricted, which is basically our operations. Also part of unrestricted is our board designated funds. Now these are like our reserve funds or things the board wants to set money aside for. Maybe they have a project coming up. Maybe they want to do, I've had one board set aside money to start a planned giving campaign. So those are things the board wants to do. And then finally, the third area is our restricted. Now this is donor restrictions. And I would recommend one account for each grant, especially the large grants. And then if you have an endowment, of course, you'll have a separate account for the endowment, but all of that falls under restricted net assets. So when selecting your accounts, keep in mind the groupings that you need for your various departments and programs. Now, we're going to be utilizing these grouping tags. QuickBooks calls it classes, other software calls it something else. But think of these grouping tags as columns on your, say, your statement of activity. So you have your revenue and your expenses as rows, and each column is a grouping tag so that you can see what is your income and expenses for each program, each department, and then you'll have your total for the organization over to the far right. And we can have subgroups. So for example, say you have a youth program, but within your youth program, you have 3 other programs: healthy meals, mentoring and tutoring, and leadership development. And some reports require that you just report on the youth program in total. Other reports require that you report on each of those individual programs separately. So you can have sub-programs, just like you can have sub-accounts, you can have subclasses or subgroups. And then finally, we hit on this a little bit earlier, talking about using customers or projects to additionally tag information to link them to a grantor or a grant. And if you have a grantor who's giving you multiple grants or multiple years that you want to track separately, maybe you create a customer and then each grant is a sub-customer, or you create a project and then each project is a sub-project. But then you can track the activity for each grant or the grantor in total. And depending upon what dates you run the reports for, those reports, that information will cross your fiscal years. We can do things like that. So you can get those grant reports, and we can design reports that'll feed into that grant report. So there's no need to have hundreds of accounts in your chart of accounts. It becomes too complex, and it's just too likely that you're going to make errors. Once you've set up a system where you have accounts, groupings, projects, make sure that every transaction gets tagged. Some software even will give you a warning or require you to do it before they let you save the transaction. Keep in mind that there's costs and benefits to having too many accounts, but also too few accounts. If you have too few accounts, you're going to be spending a lot of time analyzing outside the system. If you have too many, it's going to take a long time to get things coded properly. Remember that your ability to make good decisions is based on the information that you get out of your accounting system. So please spend some quality time designing your chart of accounts to meet your needs now and in the future. I hope this was helpful, and I want to thank you for joining me today. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.